Hello active traders, and welcome to our TradeMastery.com channel dedicated to helping you become a more successful trader, trading for bigger winners more often. In this episode, because the stock market's just now starting to sell off sharply, we want to look at potential ways to profit from the upcoming market sell-off. Coming up next. With our S&P now testing the critical 100 simple moving average line, it's a key place for decision making for professional traders. What people like myself are looking at is how to go long in the inverse ETFs, instruments that go up when the stock market sells off, in case we have the mother of all sell-offs. There's blood in the streets. We've got bad news bears on the street, and markets continue to plummet on down. How do you profit from it? Now personally, I'm not a big fan of shorting overnight because of the unlimited upside risk in case there's a gap up. Instead, I like to go long and have traded long in the inverse ETFs for many years. Let's take a look at a handful of these instruments and what the upside potential is. The first one to look at here is the group of VIX ETNs, the VIX instruments. These are for experienced traders only. Usually not good for long-term swing trades, but for shorter-term, several day to several week swing trades, they can provide outstanding trading opportunities if you know how to trade them. The three that I trade personally are UVXY, and take a look at the chart here, UVXY. The next is VXX, VXX. Take a look at this chart. See how it's starting to bounce? Like the UVXY chart, they're starting to pivot now, getting closer to or breaking above the key 50 and near 100 simple moving average lines for pivot plays. The last one is TVIX, TVIX. One of the things I like best about trading ETFs is that you can choose the price point that you want to trade depending on your own personal risk tolerance and personal preference. So I trade all three, but you can trade the VIX ETNs at different price points, trading either UVXY, VXX, or TVIX depending on what price point you're most comfortable with and what makes sense for you personally. Other short or bear ETFs that go up when the stock market sells down include instruments like FAZ. Take a look at this chart. Here's FAZ starting to bounce. Another one is QID. Take a look at this. It's got an uptrend last week or so. Another is SDS. Here's the SDS chart. You can see another one, TWM. So there's many to choose from. That's just a handful of them. I've traded those and others in years past. If you remember the 2008 market sell-off, those all skyrocketed up during that time. Now that we're at 2017 and the stock market's really showing some signs of distress. You look at the S&P chart, go back to the S&P right now, you can see that it's got the biggest sell-off in recent months. Every time historically the S&P has lost the 50 SMA line, it's recovered. But it hasn't done so yet, and now we've got the biggest sell-off that's just touching the 100 SMA line, and that's a key technical trigger point that all the professional chart analysts and tech analysts are looking at. I'm looking for how to capitalize on that if the market goes down and continues down with these types of inverse ETFs. So again, just cycling through them quickly here in the background, you can take a look at some of the different chart patterns and see emerging signs of strength in the bear or inverse ETFs. Plenty of upside in those in upcoming weeks and months ahead. So we'll also be covering how to trade those in my live trading room at tradingtheopen.com, especially good for day trading. I like UVXY as my favorite instrument to day trade for ETF day trades. UVXY has had the best point range and volatility for intraday trading. So if you're not yet a member of tradingtheopen.com, you can go there. That'll forward you to the page inside my Trade Mastery site where you can try it out and see how well it works for you if you're a day trader. If you're a swing trader, be sure to join swingscans.com. swingscans.com. And if you go there, that'll also forward you inside my Trade Mastery site for information on that. And we will be covering, as we have this last week, the inverse ETFs as well as exceptionally strong breakout charts. So anyway, I hope that gives you some food for thought. Remember, if the stock market collapses and sells off, you don't have to just put your head in the sand and stay away from it. What I'm going to be doing is seeking a profit from breakout moves in the inverse ETFs that go up when the stock market sells off. So that's the bright idea of the week. So until next time, trade intelligently, trade with real tight stops, play the field of a handful of instruments, and go get them. Try and make as much money as you can. If you like this video, I would certainly appreciate it if you give it a big thumbs up. Feel free to subscribe and click the notifications, the little bell-shaped icon, so you can be notified when I've got a new video on our TradeMastery.com YouTube channel at Trading Television. And I'll see you guys next time. Best wishes for success in your trades.